for bookkeepers. That is myself. So for those of you who don't know me, I'm Tanya Hiltz. I'm the founder of Cloud Bookkeeping Services and Tanya's Bookkeepers Bootcamp. I've been providing bookkeeping and income tax services since 1997. I've been working with QBO reactively since 2012. I actually embraced cloud technology in 2014. I implemented value pricing in 2015. I tripled my sales within the first 12 months of offering the value pricing. I was a 2016 Black Swan sponsored by Intuit, so I mentored under Ron Baker. And I'm a new member of the Intuit Trainer Writer Network. Okay, so my story, I chose to specialize in QuickBooks Desktop as my niche was a small entrepreneur, and QuickBooks seemed to be more targeted to my market. I reactively started supporting QBO in 2012, just simply due to the demand of some of my clients, but I used it like the desktop products. I spent the next year focusing on learning all about cloud accounting, apps, and value pricing, and how I could transform my practice, from data entry into a more data management and more of an advisor role. Sorry, I'm just stopping here because somebody's having issue with the audio. Bear with me one moment here. Sorry, just bear with me. I've just got Quessy can't hear me, so I just have to respond to him. Okay. Sorry, I just have to respond just to let him know that I do know that some of you have been able to hear me, so which is great. Okay, so back to this. So my apologies. So yes, I spent the next year focusing on learning all about cloud accounting, apps, value pricing, and how I could transform my practice from data entry to data management. I implemented everything I learned, tripled my sales within a year, and I'm on target to double the sales again this year, just strictly due to that part of my business. Clients liked what I offered, and like-minded clients began to spread the word. It freed up more time for me to be able to utilize all that was now accessible to me to help my clients grow their businesses. And I refound the passion, as let's face it, what we do is mostly data entry, and it really wasn't what I was passionate about at all. And then, of course, I became the Intuit sponsored Black Swan in 2016, mentoring under Ron Baker in the ITBC Black Swan program. And my practice has now grown from just me to myself and 3 employees. And this is all within the past 2 years. So it's been quite big. And now I can work anywhere where there's internet. So although I chose QuickBooks products, that was just my tool of choice. The value pricing formula that I'm discussing going through today can be used with any of your accounting software packages, traditional, desktop, or cloud-based. However, when you do use compatible cloud-based software and integrate the apps and time-saving tips I'll be reviewing, you can actually be more efficient and substantially increase your bottom line. So we'll just get right into it. So why value price? With hourly billing, we're penalized for our increased experience, for being faster at processing, for our increased knowledge, for having more certifications, for becoming experts in our field, for leveraging current technology, for offering the client more value, for providing custom solutions for each client. And if we're employees and we did all of that, we'd actually be rewarded. Now, I like to call value pricing right sizing. It means the right client with the right solutions for the right price. And right sizing is a win-win situation. And with that, the client gains agreeing in advance as to what solutions we'll provide them, agreeing in advance what price they're willing to pay for the solutions. And then we can also turn around and teach our client to price their services, which increases the value that we provide. I just want to stop there and just mention, I've seen a few people that have just recently come on since I've started. This is being recorded in full, and everybody who did send me their email addresses when they registered will be providing a recording, so you won't miss anything. Don't worry about that, and then we will be opening it up for questions at the end. Okay, so with the right sizing, we gain agreeing in advance to what solutions we're providing, agreeing in advance for what price the clients will pay for our services. We now know what our monthly recurring revenue will be. We're now being paid in advance for our work. And now there's incentives for us to gain more certifications, leveraging the most current software, and completing the work in the agreed upon time frame, as we're no longer penalized for our speed. So anyone can right size using any software. So right sizing could work. I think this looks like almost a duplicate cloud or slide. Anyway, right sizing can work if you're using any desktop software. However, by leveraging the most current cloud technology, you can increase your productivity while decreasing the time you're working on the file, all while still charging the same fixed rate as you have the client still obtaining the agreed upon outcome. And so the whole idea behind this is to actually focus the client on the outcome rather than how long it's going to take you to achieve the desired results. So, for example, if you go to a restaurant or whatnot too, you don't really care whether it's, 3 minutes or 5 minutes to get you that food through the drive-through, whether you're sitting down at a table for, unless you're in a rush, you don't really care. You just want good food. It's the same thing here. You want them focused on the outcome. The outcome is going to be a good product that they're satisfied with. So what tools do I use and how do I use them? So I use QBO as my main accounting software. Again, that was my tool of choice. I use 17 Hats for quotes, contracts, workflow, and automatic emails. I use HubDoc because it pulls the bank statements and has, we can have the client submit the receipt via the mobile app or email forward or automatic. We set a lot of them up as for an automatic pulling as well. I use Vertessa for the pre-authorized withdrawal. Again, that's just my tool of choice. Pluto right there is very good as well. I have my reasons for one, so there's, not necessarily one or the other, but so definitely if you, want to offer this something, either pick one of them, but offer the pre-authorized withdrawals. I offer clients the options of the 1st or the 15th of the month, and I collect advance payments. So for example, if they start up, then they're going to pay basically almost like their first and last. It's like rent. Your insurance, if you think your insurance, it's the same thing with insurance. You give a larger payment up front, but this way, if the payment comes back from the bank account, I know I still have enough time to be able to reach out to the client, receive that extra payment. I don't have to stop work right away. So it just gives more time and more flexibility. And so upon their first payment is when I would collect almost like a double payment. And then at that point, they're just kind of always, a month ahead, or I guess essentially almost 2 months ahead of the game. And Invoice Sherpa, I use Invoice Sherpa for sending out AR follow-up. I use it for about 15% of my grandfather clients that are still on a direct billing versus a pre-authorized. But I offer AR packages as well as part of my plan options to clients because clients have cash flow issues as well. So Invoice Sherpa is great for that. And that's free for pro advisors as well too. Okay, so time-saving cloud accounting software features. So bank rules, items such as bank fees, interest charges, automatic loan payments, daily merchant deposits for clients, maybe with a non-integrating POS or an old-fashioned till. I have all of those items automatically set to just, read off the bank feed, go in, and it works great unless we have, I call them temporary stutters from the bank feed. I'm sure we're all familiar with some of those. But anyway, for the most part, yeah, it works great. And I offset those against the monthly sales receipts. And recurring transactions. So for recurring items or templates, so like for frequently used journal entries, for example, manual payroll when external software is done. Their invoices, if I've got them on a fixed rate, I go in and I automatically have the invoices set to run. So simple little tweaks like that, I can save myself a fair amount of time and I can save time on my client's files. So just by entering some of these, I was able to save myself 10 hours a month just by simply using what came with the technology that I was using. So with the value pricing or the right sizing, the most important thing is to educate. You really need to educate that client on exactly what it is that the services offer. Clients are used to the traditional bookkeeping services, which is, again, we all know that they drop off, they're billed per hour. These days we're offering something different. It's very different. It's very unique. So we need to educate them on what the difference is between us and a traditional bookkeeper who may not be going this way yet. And again, have them focus on the outcome. We need to educate them on the value that they're receiving. So again, that the price is, again, based on the value, not based on an hourly rate. So when people ask me what my hourly rate is, I don't price hourly. I price based on their needs, their wants, and we come up with a fixed price package. That's how I would describe that to my clients or leads. We want to offer them options. So, it's always recommended at least 3 plan options. Every time I sit down and talk to a client about a price, I always have something in my back pocket that I pull out as well. There's always an option because, of course, we know clients like to try to negotiate. So I always have options, whether it's options I'm discussing with them or in my back pocket, I always have something to be able to pull from. Software costs, we need to take account the software that we're using and what it's going to cost us to use that. So we use minimal software here just because I don't want to overprice myself. My target or my niche is the small sole proprietor with maybe a few employees, if that. If I were dealing with larger companies, medium to large size businesses, then they might have, a deeper pockets to be able to cover, software costs because they might have a more complex system. But with myself, I need to be aware of that because if I'm going to lose somebody over $20 or $30 a month, I don't want that to be in fucked up software that they really didn't need. We do need to take into account the time that it will take us. I will show you how you can do that without using a time clock, and it's a very simple formula. It's just, I've got it down to a point system. So you have similar to Weight Watchers. I'm sure everybody knows Weight Watchers. Instead of calorie counting, you're just counting points. It's the same type of idea, and I'll show you exactly how you can start implementing that right away. Profitability. We need to take into account our profitability and how profitable that client will be to us. And then, of course, the bottom line. The bottom line is what you're willing to walk away. So if you come up with the price to a client and the client says, no, that's too expensive, is that your bottom line? If you talk to different people in the industry, and Ron, for one, he says if they've said yes too quickly, how much money are you leaving on the table? I don't necessarily price that way. This is a personal thing, and you'll have to find what's comfortable for yourself. But I always come up with my bottom line prices right up front. I want to know that if they say no, I'm comfortable with that. There is nothing I can do to change that. So I would negotiate maybe with services, and I'll show you how to do that as well. But I don't negotiate with price. So the price is my bottom line, but again, in my back pocket are different things that we can do to negotiate with the services that may either impact the price or impact the value to the client. Now, Ron Baker suggests in his book, Implementing Value Prices, that you value the following items by the following percentages. So you take your hours times your base rate for a fixed price, just for being able to give the client a fixed price. That's definitely worth something. That should be worth a 10 to 20% surcharge. And it's definitely valuable to the client so that they can put into their budget exactly what it is that they're going to be paying. Change orders, 5 to 10%. Now what this means is the little extras that they might add in from month to month. And of course, this means little change orders. If they're going to come up with something big and say, oh, here's a big CRA audit, plunk it in your desk, or they've taken on a big project, or hey, they've just hired a whole new team of 10 people. Something substantial is obviously going to change it. But otherwise, just the little changes, they just need extra financials. They're going in for financing, maybe adding that one extra employee, something like that, a little bit of extra work for, a small CRA review, something like that. You need to buffer that in because you don't want the client to feel that now that you've told them there's a fixed price, you're constantly changing the price because they're constantly changing the scope of the agreement. The scope of the agreement is important, but it's also important to have that little bit of flexibility in there as well. So if you charge about 5 to 10% and allow for the small ones, then you're covered for that. A value guarantee. We're all giving this right now. If somebody says that they're not happy with something, or something was done incorrectly, we're going back and we're fixing it. Any other service that you go into, or when you walk in and you buy a computer, if you want that warranty, that extended warranty that covers, people coming to your house to fix it, or having a replacement one, replacement computer or replacement phone while yours is going in, they pay more for that. They pay more for a warranty. We're guaranteeing our products and guaranteeing your service, and we're not charging more for that. So you should definitely be charging anywhere from 15 to 30% for that, because it is very valuable to have that included and for the client to know that you're taking accountability for that. Payment terms, 5 to 10%. Now, payment terms could just be you're putting them on a payment plan and to cover your merchant fees and any additional like Pluto or Rotessa costs or whatnot. Or this could mean just getting flexible with them. So, for example, if you have a business who is a seasonally based business where the majority of their income is within 6 months of the year, you may come up with some creative payment terms and just say to them, okay, you know what, why don't we just have your payments over 6 months? So we'll take your payments over the 6 months that you're actually earning the income, and the other 6 months, I'll still do the work that's come in. We're still going to keep your system, your bookkeeping and financials flowing, but you just won't make the payments because you'll have already prepaid. So coming up with something creative like that for payment terms is valuable to the client, and they're willing to pay a surcharge for that. So anywhere from 5 to 10% should be in there. And unlimited access, 10 to 20%. Now I'll tell you, the first time I heard this from Ron, this scared the heck right out of me, because I thought, oh my gosh, 10 to 20%. Clients, if they know they have unlimited access, they're going to be hounding me and calling me all the time. I'll have no time to be able to bring on new clients. That's not true. If you've got the right clients at the right package with the right price, once they're set up and they're going, there might be a little bit extra contact in the beginning. I have some clients that I have to reach out to because I haven't heard from them in a month or so, because they're not contacting me at all. Most of them, it's just now a quick email. Once they're comfortable with the system that's in place, they're trained, they see everything's going well, and they've got the confidence in you, they don't need to check in with you anymore. So that unlimited access, again, it's kind of top heavy, but throughout the year, that's there. And of course, depending on what package you pick, you can have the unlimited access maybe by email only, or you have 48-hour turnaround for email access if they're on the lower package, whereas a higher package maybe you'll 24-hour turnaround by phones, or give them your cell phone number to be able to contact you there. Again, feel free to get creative so that way you come up with a custom solution for that client that suits you both as well too. And then you need to take into account your apps and your add-ons. And we'll calculate the hours from the balance sheet. So it's pretty easy. Again, I'll be able to show you how to do that easily. And then there's the final is the gut price. So the gut price is, what you think the client will be able to afford. Some clients can value your services more, but not be able to afford to pay for your services more. Whereas there might be somebody who can afford to pay more, but they don't value your services more. So you need to take the client into account, and the only way you can really do that is based on your gut price. In our boot camp, what we do is we actually go through, we actually have a session on how to try to make sure you've got that right client so that you can kind of trust your gut. But that just comes with talking to the client. Make sure you have those conversations, make sure you're asking the right questions, and you understand what it is that they need. And then from that, hopefully your gut will be able to tell you properly. And now what this means is that you're valuing your expertise at anywhere from 45 to 90%, but now you're charging an appropriate surcharge for this. But again, you're not telling the client this, you're just building it into the price. So I've come up with a formula that does this because that sounds pretty complex. There's a lot of different keys to come in this, so it's just a little happy dance. So what we're going to do, we're just going to jump right into a demo of the template that I've created. So here it is. So hopefully everybody can see this okay. So let's do a quick review of it, and then we'll kind of go through and work on some actual examples. So the first sheet, now this is what I started using before I started using 17 hats for my quotes and workflow process. So as you can see that, if you wanted to use something similar, it's still as easy. You don't have to use that fancy software to be able to still access this. So what I did is I created this basic plan. So I started off with 3 plans. In the middle is kind of bolded and then highlighted because the middle plan is ultimately where I want my clients to be. So I built the pricing and the packaging and ran that for them to have the most value is in the middle. I don't want them in the small plan, but it's there for those clients in case they want it. I don't want them in the large plan because in the large plan, it might be a little too overwhelming and they're a little too dependent on me. Personally, I like working with clients where they're taking on some of the ownership of their books, maybe even just the invoicing and deposits, receiving payments part of it. But I like to work that. So I'm comfortable with clients in the middle, but yet I price the top plan so that it's priced appropriately just in case they want those services. Because you know what, if they really did, the right person, I'm not going to say no as well for that. So what I've done here is I've just come up with, and we're not going to spend too much time on this, but these were just kind of what I started. These were my starting plans, my starting points. So I kind of came up with different things in the receivables, the payables, processing receipts, the reconciliation and whatnot. I just kind of came up with, okay, what would we do on a client's file? And then, of course, you'll notice here I've got diamond, gold, and silver. Always try to put, when you're pricing this, like putting this on your website, on any material you put out, try to put your top one first, because otherwise, if you put your bottom one first, you'll find a higher percentage immediately go to the bottom one. They're focused on the price and look on the price and don't necessarily look further to see what each plan includes. So you'll want to put your top one first and then your bottom one, so work down. So then I just kind of went through, and of course, these are fully editable. So I mean, if you wanted to delete that and not offer that, or I wanted to include payroll for this person, I'm pricing them with payroll, I can go ahead and put those in there. So this is fully editable, but I could have done something like that with. I'm just going to back this out because I don't want those changes in there. And then you'll notice here, support communication. It's different for each package. Again, the financials. The financials is different in each package. So you want to be able to make sure that, again, you're providing something a little more worthwhile, and within the packages that they have to be distinct and clear differences between your packages. I've also built into the bottom of here for cleanup work. So the formula that I show you, you'll be able to use for cleanup work as well. I just have all of this, it just comes through on here because again, I used to print this off and give this to the clients. Now I don't, I just simply use this just as my guide on the front part of it. We have a bump here, client quotes, this tab, I don't use it anymore. This used to be when I used to use this. I would take this out to clients and I would actually just put everything in here. I used to price them right on the spot as well. Big mistake, never do that. I'll explain why later. But so if I wanted to put in, their name, their phone number, address, and any additional details around how I got to the quote, I could do that and save it until I got home. Now, rate sheet. So this is where we've got, you're putting in your rates, you're putting in your prices for the software. So you're putting in your base rate. Now, when you're looking at the formula to use, the base rate, what I've referred to on the other slide in here, this is your hourly rate before you started value pricing, because all of those surcharges are added on top of this. So if you've already started coming over, and let's say you bumped your base rate up, and then you're adding it in here, the bumped up one, it's going to bump it up again and you could price yourself out of the market. So when you start pricing, play with it, make sure you're working with the same thing. And of course, because we're offering cloud-based solutions these days, if you're pricing to different areas, $35, that's my base rate for where we are. We're dealing with farmers here, a much lower area. They can't afford a lot. If I'm quoting somebody in Toronto, that there might be $60 an hour. To start as a base rate. So again, it just all depends as to where it is that you're quoting, as to what base rate may be used in that market. I've just got some of the apps in here just to kind of start with. Again, QuickBooks is only here just because this is what I use. These fields, again, are all completely fillable, so you can like enter net name here. So if you did use Sage, you could enter Sage. If you use Xero, you know, you can enter Xero and whatnot. The prices, I just have the wholesale and retail prices because I just wanted to know what they are. They were all laid out here. What's in the blue is actually what pulls into the formula. So you'll see here, QuickBooks, for example, is $13.50 wholesale. Retail is $27. I've got $13.50. I don't charge more on my apps. I don't want to make money off the apps if that means potentially overpricing myself and losing the client. So that's why I do that. Invoice Sherpa is here. Again, as I mentioned earlier, Invoice Sherpa is free for us as pro advisors for our own pro advisor file. But if we want to use it for a client, there is a rate. It's $49 US. A little birdie told me they are working on Canadian pricing, but they have no idea when it's coming out, so they couldn't give me a time frame. So that's great there. There's HubDoc. You know, again, Receipt Bank is here. Wage Point. You know, so again, float, stage, Xero, anything that you wanted. As long as there's a price in here, it's what's in the blue will pull forward. The plan names can easily be changed. I just have mine, you know, for demo purposes, silver, gold, and diamond. And then here is kind of the one-off items or your ad hoc items. So, you know, if you want to offer personal income taxes, let's say it's a sole prop and it's, you know, taking a little bit more, you want to offer, you know, for their taxes and your, you know, $500. Let's say you want to offer, you know, an AR package. And your AR package, you can, you know, offer, again, a flat fee, and then it'll bring it the monthly price here. And that's what goes into the plans. So we'll just go kind of through some of the instructions and the tips on here because these are really important. Then we'll move on to the worksheet, and then we'll actually use some scenarios and actually dig right in there. So the rate sheet instructions, again, you're entering your chosen rates in the blue area, and the base rate is before the value added percentages are added. So again, that's very important to know that. Just circle that there. The white fields can be customized with your software choices there. And the retail and wholesale prices can be edited when the cost of the apps change. And this form has suggested levels that might be included in the different price plans. And most of the form is fully editable so that you can customize it as you wish. Okay, and pop back here. Oh, I don't know how do we reset. Look at that, I play with something new and I don't know how to reset. I don't want to hit the garbage button in case I stop the recording. So we'll just leave that there and deal with it. So the fixed value pricing tips. So as I mentioned earlier, these rates are built so that they're in the middle of Ron's suggested value surcharges. I recommend that you have a leniency of 15% either way based on how you perceive the client values your services. I also recommend that your walkaway price is no less than 15% off the recommended price plans. It can be more, but once you start to dip below that level, you're lowering, you could end up lowering your regular hourly rate and make more if you build hourly. So there's really no point to the value of fixed pricing. And price the lead when you're not with them so that you can ensure that you're comfortable with the amount you're quoting them and have taken everything into account. I can't stress that enough. That's how you build your confidence. So I price them, or when I have all of my information, I set up a time that I'll call them back or set up a meeting with them to actually give them a price and get more detail into exactly what it covers at least 24 hours or 1 day later, because I want to be able to work with this, kind of go through the scenarios, make sure I've got everything covered, make sure I have my negotiating options covered, and you know, my back pocket options, as I call them, and then it helps build my confidence. And confidence is huge. Every single time when I've quoted somebody, when I'm with them, they always come back with, clients always come back with the same thing, but I'm not ready for it when I price them on the spot, even though I know it's coming. They try to negotiate, and I always end up feeling bad for them for one reason or another, and I end up dropping my price down. And 100% of the time, I've regretted it because it's been more work that it's been worth. They've been, too needy. There's always something. So when you're pricing them, when you're not with them, again, and you give yourself that day, it gives you time to be comfortable with your price and comfortable that if they say, no, that's too high, what is your bottom line price? Now, if the customer wants to negotiate further, negotiate services. Have the client do more or take some services out of the package. The client may not value what you offer, the services that you're offering. Review what you're providing and what's important to them. And it's funny, when you're talking to them at first and they hear a fixed price, they'll come up with, a huge list of things. But when you get right down to it, how many of those things are actually really important to them? You may have included items that are not of importance, and therefore, just simply by changing the services to those of equal value to you, you may increase the value to your prospective customer. And not everyone will value what you do. You need to determine your minimum, and you need to stick with it. Now here, I'm just going to interject a little anecdote here because I think this is really hard for everybody to realize that not everybody values what it is that we do. So my best friend, we've been best friends since grade 10. I have no idea how long that is. I'm 45 now, so I guess do the math. It's been over 20 years anyway that we've been best friends. Our children are best friends. She knows everything that I do. Her services are billed at over $200 an hour. She's in the beauty field, and her services are billed at over $200 an hour with the doctor that she works with. You would think that she knows me. She knows what I do. Her services are billed at a huge amount based on value, that she would be able to understand that. I had helped her boyfriend get everything set up for a taxi company. It was just out of, the goodness of my heart. It was, she had met him after, a nasty divorce and had moved on, and I was trying to help things get positive and help her. So I gave him a lot of advice. He got everything set up. And when it came down time to do the book, she said to me, I know that you're going to be accurate, that you're going to be in compliance, that we're going to be in good hands, that you're not going to let anything get through. We're not even looking at anybody else to do the books. So I quoted them. Now, his business at that point was bringing in about $7,000 a month. 50% of that was actually his. 50% of it was actually paid out in expenses. So he netted $3,500 a month. The price that I came up with was based on, I think I told him 300, 350. It was very low. But again, I didn't want to go making money off them. I had extra time. I wanted to try to help them out. So I just quoted that. And she actually kind of chuckled and she says, no, Tanya, she says, that's too high. So I said, okay, let's go back. I said, if you want me to train you and you can do this part of it, and I will step in and do this part of it, so we'll share some of the responsibilities and whatnot, we'll bring it down to 250. Again, would not put anybody else that low for what it was that I was including. And she laughed. And her response was, all you're doing is adding numbers. That's ridiculous. Right then and there, it hit me that, wow, if she doesn't understand and value what it is that I do, there is no way that everybody else out there is going to do that. So that was an eye-opening moment for me. And of course, so it really speaks to the fact that you really need to sell your value to the prospective client that you're talking to. Really point that out and really sell it, but also be aware that there are just some people who are more focused on price, and no matter what you say, aren't going to value it. So those are the people that are more focused again on price and are going to try to bring you down and are going to be the biggest drain on your stress levels, your resources, everything, because they're probably already feeling is going to be too expensive. So want to try to maximize all of that. And that's not the type of clientele that we want. And I think you only need to have one of them to really understand and realize they're not the ones for you. Okay, so moving on, pricing apps. You're really not going to make any money on the apps. That's just going to increase your bottom line, and the value should be focused on the services you provide. Therefore, it's recommended that you at least ensure to cover the cost on your apps. So as I said, all of my apps, I charge wholesale. The only ones that I do any different are ones where you get a volume discount. So for example, HubDoc, gives a volume discount. It's 10% extra when you have 10 or more clients. Invoice Sherpa, again, the same thing. They give a volume discount. What you're running into is if you do that and you offer them your volume discount, what happens if you lose a client or two? Something changes. You move them around. All of a sudden now you're not making enough money to cover the cost on your apps out of what you've built into your pricing. And so therefore it's actually coming out of your profitability. So, for HubDoc, instead of, if you do have, 11 clients on HubDoc, still charge everybody the $25 is what I do. Because in that way, again, $25 is the non-discounted wholesale price for that. So to different pricing levels, and round prices that are rounded to the next dollar for monthly price. Rounded numbers are much more pleasing to the ear. Offering AR and payroll packages. So if you're offering that, don't forget to include an account for the cost of the app that you're using for those tasks as well. And variance. So with true value pricing, some clients might value your services slightly lower, possibly due to budgetary reasons, but these clients and all other aspects would be a really good fit for you. Alternatively, some clients might value your services more and be able to pay more. So as you should take the client into account, as well as your work, your apps, your add-ons involved, this pricing module has used the middle point of the values as recommended by Ron Baker. Therefore, in order to remain profitable, you do have the leniency that for every client you use a minus variance for, you can add a client with a plus variance. So this is that gut price that we were talking about. And then you'll average out. So again, I'll show you exactly how you can use that. And using the variance boxes, really simple instructions. Enter the percentage you want to add to the total in the variance plus box. So we recommend up to 15%. Should you wish to lower the price and offer them, a discount, I wouldn't call it a discount, but if you want to lower the price by 10%, enter the percentage into the variance minus box. Again, we recommend no more than 15% in order to truly remain profitable. And you only need to enter the whole number, no minus or plus signs. And this will total into the calculation, and the client won't be aware of what you did behind the scenes, even if they're watching you. So if you do happen to be pricing the client on the spot, they won't know any of this because you're only working in the one sheet. Again, highly recommend against that. So there's just a run through of that sheet. And when we move over to the worksheet here, this is where everything pulls together. So I've got, like, from the balance sheet up here, this section here is for cleanup work only. So it's why it says here 1 point each, points only count towards cleanup. So what you would do is basically, I've got it narrowed down to 1 point equals approximately 1 hour worth of work. So if you think back to, without the technology and all of the time-saving instances and items that we can set up with the technology, what did it take? Bank account. Let's say, an average of about an hour, some less, some more, but an average of about an hour to reconcile a bank account. Credit cards, line of credit, again, if you're reconciling about an hour. Cash on hand, only if clients really use that. So what I would do is I would put points in there, and same thing if you're helping them clean up their AR, their payable, payroll, sales tax, or their equity accounts, then I would put a point in for each of those accounts that we're helping them clean up. So, and again, I'll show some examples with that. And then when we get into pricing for the monthly prices, we've got it broken down here. Now, what goes in these boxes has nothing to do, that only pulls forward into the cleanup. So let's just go through here. So let's say we've got one client who's got 24 months requiring cleanup. They've got, one bank account, one credit card, the sales tax, and payroll. So let's say everything else is fine. They don't have a line of credit. They very rarely pay anything out of cash on hand. Their receivable is fine, their payable is fine, and their equity is fine. So a situation like this, you can just ignore all of these. So a situation like this, if I'm doing cleanup, I'm actually going to probably do that in desktop, use desktop to get caught up for cleanup. But so you'll notice I'm not including any software costs in this because this is just a great big cleanup. So when we pop over here to the client sheet, right down here, 24 months of cleanup will be $58.80. That may sound like a lot, but let's just go back and take a look and kind of back this out. You've got 24 months at approximately 4 hours a month. So 24 times 4, that's 96 hours. So 96 hours divided by 58.80. Oh, sorry, it's 58.80. It's divided by 24 months. That's really only $245 a month for that. So again, sticker shock there. That might seem like a lot, but when you actually break it down into, the number of months, that's not necessarily so bad. Now, if the client's a very small business and you look at their bank account and you say, you know what, it's a half a page, the credit card is a half a page, then you don't necessarily have to count a point for each. Again, think in terms of it's 1 point per hour. So if you say, you know what, I could do that in half an hour, then, just lump them together. Just say, okay, 1 hour will cover the bank account and credit card. If you pop back over it, that brings it down to $44.10 for 2 years. I don't do that personally. The reason why I don't is because I don't want to give that client incentive to turn around and let themselves do that again and bring me catch-up work. I do not like catch-up files. And there's always many, many more surprises when I get into them. So I don't like this. I will do a catch-up file if the client is going to sit down and come up with a plan to keep them caught up. So if they want to come up with that, great. If they just want to drop me off their box of stuff and then wait 2 more years and drop me off the box again in 2 years or 1 year, I'm not interested in that type of client. So I will price them high. You don't want to, again, give them incentive and have them say, well, if it's cheaper for me to stockpile it, that's what I'll do. So you're doing yourself a disservice if you quote, if you do, try to bring things down and try to give them discounts on that. You're really doing yourself a disservice. So what I've done is, again, I've got creative with the payment plans. And if I say to somebody with their cleanup work, okay, here's your price. If they go into some type of a package with me, a monthly package, whether it be to train them to take on part of it themselves or whether it be a monthly bookkeeping package for me, I'll allow them some leniency with the payment. I might say I'll take, we'll take 50% of it. I'll take 50% up front, another 50% when I'm, or out of the 50%. So that would be, I'd take 25% up front, 25% when I'm halfway through, and then the other 50%, I might allow them to finance that over their first year that they're with me. Of course, I make sure the contracts that I have them sign are ironclad because last thing I want is for them to end up leaving and owing me the money. So they need to realize they still owe that. But if I get a good feeling off them, they were referred by a good client, something like that, I'm going to get a little bit creative with that for them if that helps their pocketbook. So that's where I would negotiate to try to help them versus negotiating on the price. When we get into the monthly ones, again, let's just take that same client and let's say there is one bank account. Now on here, these as well can be just edited. Again, these are just ones that I have in here. Oops. Oh, there we go. Okay, so these are just ones that I have in here that I use. It doesn't necessarily mean anything just because these are in here. So if you had somebody, you said, oh, well, there's something that's not on here and you wanted to use the same template, it doesn't matter. You can just simply, again, just think 1 point for every hour of work. That's the formula that you need to think about. So again, we'll take this. They've got one bank account, one credit card, their sales tax. And you'll notice here it doesn't say anywhere about payroll. So if they've got payroll and they're going to handle the payroll completely, maybe I might, put a point in here for payroll. So that way I can give them their options. I can say, okay, in package 2, I'm going to manage the payroll for you. In package 1, I'm just going to give you a little bit of a training and you're going to manage that yourself. So there's definitely those options. Of course, again, keeping in mind, I want clients on the middle package. I don't want them to be on a package themselves. So what I would do is, again, we go here. Okay, so we go up here. Now let's take the same clients. You know what? My old bookkeeper used to pick up and drop off. I'm a busy guy. I don't want to have to deal with any of this stuff. I don't like technology. This is what I want. I just want you to pick up and drop off like this guy did. Just come by and pick it up once a month. I would say, okay, you know what? I'll price you on that. I'm going to put up a point for picking up and dropping off receipts. 1 point for the bank, 1 point for the credit card, 1 point for their sales tax. In this next package here, I'm just going to go ahead and put in the standard items. So the basic items, so anything here pulls into all 3 packages. What's here pulls into the top 2 packages. What's here pulls into only the top package. So if you want to work around, again, just move your points around. So now let's say that same client says, okay, now they've got receipts. Let's say they've got, you know, an average of about 70 receipts or expense transactions a month. So that's 2 points. It's 1 point for every 50 receipts here. So that's 2 points. Let's say they say to, you know what? Yeah, this is what I want, but I only use QBO. I use HubDoc. I only use online solutions. So I know how to scan the receipts to get them into HubDoc, to be able to get them into QBO so that way they're attached, which is part of the package that I offer. And that same client now says, okay, they don't like technology. They don't want to take advantage of the bank fees. I'm going to add another point in there because that's going to create more work for me. And when it comes to the premium add-ons, I just add a point in each one of these boxes, regardless of kind of what this is for, because if they want that higher package, this is the premium package. They're going to pay for it. So I just always, as a default, just have 6 extra points in there. Pop back over here to the middle section, the software included. So let's say this client, we will price them with Dixie2, QBO with payroll. And I would include in HubDoc, and that's about it. Because again, I'm trying to keep the cost down. Or if I wanted wage point, I could just type QBO Essentials, and then there's wage point. So let's say they had, you know, 2 employees, just something really small. And then over here, the additional items. So if I wanted to offer their personal income taxes, only for one person in the household, again, back here, I've got their personal income taxes. This is what it's going to cost them. Here, if I wanted to do an AR package, let's say I want to do their AR, it might be $600 a year, which works it to be $50 a month. So I could put AR package. And then when I go back over here, there's the AR package. I'll put a point in there if I want to count the AR package. So I would just go ahead, fill my point system in, and the variance here, this is where you can put the variance plus or the minus. So again, if I knew that this person was well connected, I knew they couldn't afford it because they're just starting out, they're, you know, we're just trying to get them out of financial trouble. Maybe I want to lower their price a little bit. I could go ahead and if I put 10 in here, that'll lower their price by 10%. If I say, you know what, yeah, I want to add in a PITA fee. I think this person is going to be, you know, highly, I guess, you know, a more of a difficult client and high maintenance, I could add 10%. So I'm just going to leave that blank for now. So what we're going to do is we're just going to pop over to the client sheet and see those prices. So here they are. So for that low price, which I'll tell you, all I do in this pattern, sorry, not that one, this one here, all I'm doing in this one really is, according to this, is I'm just reconciling. I'm not doing much, so I don't know that I would even offer them that one in this case. I would just kind of start here and say, okay, for what you've asked me for, this is it. It's $600 a month. Of course, I'd round up or round down. I'd get rid of that 17 cents. But I say, this is what you've asked me for. I would wait. That sounds high. I expect them to say that's high. If they don't say that's high, it's either one of 2 things. They're going to walk out the door and not call me and just, you know, placate me, or, you know, I don't even know what the other alternative is, but that's high. So I expect them to say that's high. Maybe they're just a sticker shock. So I'll wait for them. I'll say, okay, what you've asked me for is going to cost you $600 a month. Because again, this middle package or middle rate only pulls in these top 2. So this is basically what they've asked me for. Payroll. I've got to do the manual entry because there's no bank fees. I've got to scan the receipts. Plus I've got to process the receipts. Plus their sales tax, a credit card, a bank card, and picking up and dropping off the receipts. So if they don't say anything back, I'll just say, you know, well, how do you feel about that? You know, do you feel that's high? If they don't respond right away, I'll lead them to that. They'll say, yes, that's extremely high. And I'll say, okay, that's what you've asked for. So this might be one of your package alternatives that you give to them as well. And then I would come back in, and this is where you negotiate with your services. I'm going to say, you know what, if we just do a little bit of tweaking, we can bring that price down. But this is what you wanted, so this is your first price. I see you've got a smartphone. If we download an app on that smartphone so that you can just take a picture of a receipt as you're in, buying something in Staples, snap a picture of that receipt before you put the receipt away. The way the receipt's not sitting in your car, a thermal receipt is not going to end up, going blank or bleaching and you're being in your car on a hot day in summer. You're good. So I'm going to take off a point for that. We've still got their bank account, their credit card, their sales tax. That's not going to change. The receipts I process, that's not going to change. But scanning receipts, I can take a point out for that because I'm not scanning them anymore. They're snapping them for me, and we're going to set everything up for as automated as we can. Now, if I say to them now, if we take your account, your bank account, and we actually link it to the QuickBooks Online and the HubDoc so that I can get the information in as it comes in, I can go in and work on your file monthly. I can let you know up front what receipts it is that you're missing so that way you can get them to me right away. I can let you know weekly instead of being 2 months down the road, which would be general if they were waiting, stockpiling for a month and then giving it to me. By the time I get it, it's 45 to 60 days later. So if they're okay with doing that, taking advantage of the technology one step further and setting that up, we take off another point. So let's pop back and see what that's done. That's brought that down to $416.42. So that's down, $185 a month. That's something a little bit easier for them to handle, most definitely. So that's how I negotiate, is go in and negotiate with those services, and for the payroll, again, if they want to handle the payroll part of it. Let me just see here. So let's say I add 2 points up here because I'm still doing the receipts. So if I wanted to actually give them different prices on that, one exactly the same with them handling the payroll, one with me, I could just move the points around like that, pop back over here, and here would it be $355.17 is with them handling the payroll themselves, and here would be me handling the payroll. So again, I've allotted an hour a month towards payroll. So now I'm not doing that because they're entering their own payroll. They're pulling their own payroll liabilities and whatnot. So you could offer definitely those price differences. So that's one way that you can quote. So again, knowing that if you just simply think, okay, 1 hour of manual work equals 1 point, you can go in and you can price almost any single situation, and you can definitely get creative and go back and forth. So that's how I price my clients. Now, my old grandfather clients, they were difficult to have that value price conversation. What I ended up doing with some of them is I actually sat down with them and I said, okay, here's your bill for the last 12 months. I had a very difficult time with that. So the clients I really wanted to keep, I just said, here's what it cost you over the last 12 months. We're going to add a 10% increase here to cover the increased software costs and whatnot, and we're going to put you on a fixed rate. So here's the fixed rate. This is what I'm going to offer you. If there were clients that I were a little bit more of a pain, and I really didn't care one way or the other if they stayed or went, I quoted them based on this. So yes, it was a jump to some of them because instead of getting my $35 an hour rate, they're having $35 plus the value added percentages. But if I didn't care one way or the other, this is what they got. And some left, some went, and that was great because the ones that left, I did not miss them at all. And I was able to actually fill them with new clients. All new clients, I'm pricing this way. And then again, I'm selling them on the value, what it is I'm doing for them, how they're going to get their information. And once they see it, they love it. I've got farmers who they didn't even like turning their computer on beforehand that absolutely love this way. They know their taxes. They don't get an extra bill for their taxes at the end of the year because I'll include that. There's no extra software. One bill with me covers everything. And I was able to really sell them on the positive points. And they love it. And, so once people see this, they love it. They'll tell other people. And so it's easy from that point forward. So that's really kind of about it in a nutshell. Let me just bring this up and then we can open the floor. If you've got questions, go ahead and type your questions in. So while we're waiting for questions, I'll just let you know. Let me just pull this up here. Oh, sorry. I just kind of messed with I've got multiple screens and they obviously don't like me today. And I see questions are coming in, so that's great. Okay, so just while we're waiting for the last of the questions to come in, so the Excel template that I demonstrated today is available for purchase, along with other time-saving templates at limited time pricing. As a special price, it is available for $99.99 Canadian. I don't know if we have any Americans on here. I know we didn't at the beginning, but this in price includes a single template installation with a lifetime license. And for $199.99, you can purchase a template as well as an individual session for an hour with me on how to price your clients. Really, honestly, it's not needed. Just play and build your confidence. That's the biggest thing. Price out your existing clients, kind of see where it stands. And I am working on an online app, however, that I'm hoping will be ready for launch by fall. And for all of those who purchase a template, you're funding the cost of it, so you'll receive a free lifetime license. Okay, and so if you want more, you can check out my Bookkeeper's Corner on my webpage to subscribe to my blog and to find future webinars and information on my newly launched Bookkeepers Bootcamp program. And if you want to go to this website, there's a survey, and for answering a few questions, you can be entered into a draw for Tim Hortons gift certificate. I'll be emailing that link out as well with the recording. So you've got that. And I'll just leave this page up for now, just with my Facebook pages and Twitter and LinkedIn and whatnot. And let's take a look at the questions. Okay, so Diane, just an observation. One of the new roles we play as the bookkeepers is to sell the app, and we're not getting paid for that. I guess the app people, some give us a whole sale price if we sell more. Absolutely, which is exactly why we need to keep it. I don't necessarily sell the apps. We're minimalists here, so I only sell what's needed to get the job done. I'm not a salesperson for the apps. I'm here for my client and to provide my client the services that they need. I know some people out there build big apps and big ecosystems, and like you say, with big companies, it might be more relevant, but I find that complicates things. And again, I don't want to lose a sale because of an app. And I'm not here to sell an app. I use the tools for myself that make sense for myself and my client. So I used to use HubDoc and Receipt Bank, but in all honesty, HubDoc is the same thing as Receipt Bank. Yes, the dashboard's not as nice, but again, the clients that I'm dealing with are very price sensitive. So therefore, I had to become very price sensitive. Along with everybody just getting into this, I had a huge ecosystem with apps. And even on my own practice, I was signing into 12 to 13 apps a day just to be able to get my practice done. And I said, this is absolutely ridiculous. We need to scale back. So we did scale up. I think it's a natural evolution. You play something new, something shiny, but you need to scale back. And that's why I say we're app minimalists. So we use HubDoc because HubDoc does everything. It pulls the bank statements. It allows the clients to email in. So I've got my receipts. It processes through to QBO. If I've got a client where maybe I'm doing the reconciling, maybe I'm not going to actually even use any apps at all. I'm just going to make sure that they email me their statements every month and teach them how to use it. They're doing their own entry, teach them how to use the QBO app. So again, you need to be able to work with what works with the client as well as yourself. And don't be focused on the apps, because if you focus too much on the apps, you're going to price yourself out and you're not doing what's in the best interest of the client for sure. And Diane says, wow. A picture stack of apps. That's exactly it. And that's, again, I went through all that I use. It's minimalist. Yeah, I can't say enough. And I set my clients up exactly the same way. I don't focus them on that. I'm not here to sell the apps. If there's a need to put this in the workflow, then absolutely. Some clients need, I've got a new client I brought on, restaurant. They needed a point of sale app. It made more sense. The restaurant, when they took over, they were using an old fashioned cash register. I do have 2 clients that are in retail that use old fashioned cash registers too. So, I don't try to sell them on the app. If there's a need, if that's what they want to do to become easier, for them to do their jobs, absolutely. If not, I will work within what they have. And with those clients that have the old-fashioned till, I've actually just set them up on an Excel spreadsheet. They enter in their daily sales receipts into the monthly spreadsheet, and I work from that and enter them into QBO as one. So they've got what they need. It's minimalizing me, and I'm not upping their price, and everything is still happy because they're still keeping their daily till sheets. So it's able to find that happy medium. I'm not going to sit there and enter daily. I just don't do that. I can't see the cost effective for the client. I can't see that, I need to change my picture on the screen too. Still my old picture. Anyway, sorry for that. It doesn't make sense either way. So, absolutely. Pick your apps, find out what you want, what you love. So Diana said, what is your biggest objection that you hear from new clients? The biggest objection is the price. I will be very honest. It's the price, especially here because we are in such a price sensitive area, which is why when I have that conversation with them, I don't just tell them, here's the price. I make sure that I build the picture. This is what they're getting. This is the value they're getting. You will know what your bill is. You will have all of this done. You will not receive, another bill for anything that you're not aware of. You're not going to be paying $500 for the income taxes, at the end of the year. And that seems to be the big thing. I only close about 25%. I'll be very honest with that. I close about 25%. And that's pretty much what you should. It was Ron kept saying to me when I was closing every single sale, I was excited. He says, you're pricing too low. And now what I've done is recently we've actually used T-sheets just to kind of come in and get a general sense of where we are, and done the timing. And you know what? Those clients that I priced too low, I'm not really making any money off them. They're getting the extra value, but really when you look at the hourly rate, I might be $10 up a month instead of, the value surcharge is up. So they're not my profitable clients. So I've learned, I've definitely, come around, but like I say, it's about 25%. But I'd rather deal with people that appreciate the services. Where I really push that I stand out from everybody else is, first off, in this area, there's only 3 of us that actually do offer a full cloud solution. There's many people who support cloud apps, again, whether it be, Sage or QBO or Xero, it's actually a very high Sage area that we're in, believe it or not. But what was my thought basis? Sorry, something just kind of distracted me. Oh yes, but they're still using the cloud apps like they would a desktop app. So they're not understanding and they're not getting the full value out of it. So I definitely have that to bring forth, that this is very different. Because I now have all this extra time freed up with the client, I can now actually help them become proactive in helping them increase their business. So I've really embraced becoming a trusted advisor. I know we hear that and some people are sick to death of hearing that. I actually love it. I understand what it means to me. And what that means to me is I've now taken everything that I've done on my practice, solving cash flow issues, basically solving all of my pain points. I now love my job, whereas my job, it was a necessity. I did it. It paid well. It kept me home. It made everything, but I did not love what I do. Now I love what I do because I can take all of this and I can now help clients. I can help those clients that if they have cash flow issues, I can teach them to value price their services. I can teach them to start, collect their money up front. I can make a difference on their services. And I've been able to successfully do that to 3 businesses. That's what I offer that's very different. And once clients see that, the right client will appreciate that I'm helping them with their business. I'm becoming a partner instead of just the bookkeeper. So this is where it's really important that you educate on, however it is that you decide that you want to take your business. It's really important that you educate them. And again, I don't pay for advertising. It's strictly word of mouth. So somebody who's been referred to me has been referred to me by somebody who has, I've been able to do that to their business. So they kind of already know. But again, yes, it was difficult at first, but the price is that. So Diana said, but how have you priced for those advisory services? Thank you for my honesty. Fantastic information. Thank you. Thank you, Diane. So it's basically just the extra time, because let's face it, it's, when you're pricing them by the, 1 point for every hour, a bank account these days in QBO, anybody who's on QBO knows that once you've got everything entered, as long as there's no issues, like I sat here and I'm training a new employee and we did 4 credit card statements, a single page credit card statement. So they weren't hugely in depth, about 25 to 30 transactions on each page, 4 months in 40 minutes. Now that would have taken me 15 minutes, but I was training her to do it. So I showed her the first one to go through and whatnot. She's newly out of school, so she's learning everything. But I've charged an hour a point for that. So that's 4 hours I've charged for, but using the technology, I've been able to get it done in much, much less time. So therefore, that's where that extra time is coming up from the advisory services. It's in the timing that I've been able to save by taking advantage of what the technology has. So Diane says, excellent. Michelle says, love that. Well said. Thank you. Okay. So any other questions, comments? Okay, don't see any yet. So we'll give it just a few more minutes. So of course, if there's any questions, feel free to reach out. How do I buy your template? So it's on my website. I'll just kind of pop over there and show you. Okay, so my website is cloudbookkeepingservices.ca, nice and easy. And just go to Bookkeeper's Corner. And then, of course, this is where you can sign up for the blog. So you can sign up for upcoming webinars. I'm trying to expand out to do a couple of different topics. And of course, as long as there's still a want or need, value pricing, I am so passionate about this that I think everybody needs to, go over to these types of services. I've seen it make a difference that I'm doing these about once a month. So there's this information on my boot camp. So template, so to buy the template, yeah, that would just be right down here. So you just fill this in, and again, it's just like $99.99. And again, the online app, it just started. I had people saying, oh my gosh, I'll pay you for that, Tanya. That's awesome. I'd love to buy that off you. And then they started asking about, online. Oh, I wish I could get that online. It's not for Mac. I wish I could, access that for my Mac. So this is exactly why the money is being invested back into to be able to have an online so that you can just sign in from anywhere where there's internet and be able to access the same information. So again, anybody that purchases a template automatically is getting a lifetime license once it's launched. So that's great. So you can just go there for that. And then of course, if you want any information on the boot camp, which is basically 24 hours of me on 12 different topics, you can fill that in right there. Okay, and I think that's about it. So if there's anybody thinks of anything after, feel free to reach out and shoot me off an email. Otherwise, this recording will be sent out to everybody. Of course, feel free to fill out the brief questionnaire to be able to get yourself entered for Tim Hortons gift card. So I thank you very much, everybody, for your time and for attending. And have a great day and happy pricing. And Diane says, thank you, really enjoyed the presentation. And thank you, Diane. I know this is the second time for you, but the first time on an actual webinar within a room full of people. So I'm glad that you enjoyed it. And Doretta says, thanks, great presentation. Thank you. As long as it helps, I got here with help from people, and I need to give back. And time 3 for you. Oh, Stephanie, I didn't realize that was time 3 for you. Awesome. I love to see repeat people because that means you're still getting something out of it and you're learning something new, which is why I try to, again, change the examples. I know, So Stephanie says always get something new out of it. That's awesome. I know Michelle's been probably 4 times. She says thank you and enjoy the rest of your day. I think you're 4 or 5 times, Michelle, anyway. But yeah, so that's great. I love it when people keep coming back. So again, thank you very much. Have a wonderful day, and we will talk to you later. And I'm sure we will see most of you, at least probably more for Michelle, probably. Anyway, we'll see you, I'm sure, at IPPC Ignite or online anyway. So thanks so much. Have a great day all. Bye-bye.